This is Bloomberg Crypto, a daily Bloomberg iHeart podcast.
And I'm Anne Herrera, Bloomberg Senior Crypto Editor, in today for Stacey Marie Ishmael.
It's Monday, October 10th.
The cooling crypto atmosphere and the subsequent downturn in trading has had a domino effect for people who work in the sector. In the wake of plummeting prices, a flurry of crypto firms reduced their numbers with significant layoffs. Coinbase announced an 18% reduction of its workforce. BlockFi cut their headcount by 20%, and Crypto.com by 5%.
So suddenly you've got a very skilled workforce, redundant, looking for new jobs in markets where like blockchain capability can be in very high demand.
So what happens to these former crypto employees?
Banks were actually finding it quite difficult. Incumbents were finding it a bit tough to get some of this talent in the last 6 to 9 months.
An increasing number of them are getting snatched up by traditional finance firms, or TradFi. The skills that these talented engineers and developers have accumulated is now very much in demand with TradFi firms who want to explore the crypto space and experiment with blockchain technologies. Today, I'm joined by Bloomberg reporters Will Shaw and Aisha Gani.
I'm William Shaw. I cover finance for Bloomberg in London.
I'm Aisha Gani. I'm the fintech reporter for Bloomberg News in London.
To explore why TradFi institutions are swooping in for laid-off DeFi experts. Hi, Will and Aisha. Nice of you to join us. So you guys worked on a story about what's going on with crypto workers and what is actually happening. There were lots of firings. What did we find out? Who wants to start? Will?
So yeah, as everyone knows, like crypto has been really crashing this year. Lots of like major companies working in that area had been like beefing up their staff very rapidly prior to the market meltdown. Once prices started falling, they suddenly had to contract quite quickly in terms of the staff that they employ. So we saw firms like Bitpanda and BlockFi slashing jobs. One of the most prominent firms to do so was Coinbase, which is the largest cryptocurrency exchange in the US. They cut about 1,100 staff, or 18% of their workforce, in June. So suddenly you've got a very skilled workforce, redundant, looking for new jobs in markets where like blockchain capability can be in very high demand.
And of course, this happened in the summer, late summer. And so we thought it was a great opportunity to see, well, where are all these people going? And I'd been speaking to a few fintechs and they said that this is hot talent and basically very attractive, want to hoover them up. And it wasn't just the fintechs. We discovered through our reporting, it was also big tech and the traditional banks. So Wall Street and in the City of London.
So why do banks want crypto people or blockchain tech staff?
Well, I think the first thing to say about banks is they're very secretive about what they do around crypto.
Around many things.
Around many things, yeah. I mean, this is like a very contentious subject for them a lot of the time. Someone senior said to me the other day, the first thing about banks and crypto, the first rule is you don't talk about crypto.
Okay, now we have to have a Fight Club moment in the background going on. Some audio about Fight Club.
Do not talk about Fight Club.
But they are expanding their capabilities in this area. To some degree, that seems to be to do with crypto trading. A lot of it also appears to be more interested in the technology underneath, in the blockchain, and what that can do for trading more conventional securities. So we know, for example, that Citi is exploring how it can use blockchain in the bond settlement process. So these big banks are or have been advertising for key roles around blockchain and crypto in recent weeks. So Citi have been advertising for a director-level digital asset risk manager for cryptocurrencies. Goldman Sachs has been looking for vice presidents, again, around crypto and blockchain. And JP Morgan's asset and wealth management business, which looks after $2.7 trillion worth of assets is looking for, or has been looking at least, for someone to oversee blockchain strategy, including crypto and digital currencies. So those jobs definitely are out there.
But having said that, we wrote this story late summer, and considering the way the markets are right now, who knows what will happen. But just to add to that, we spoke to Thomas Olson, who's at Bain & Company, and he was working in blockchain for the last 10 years. And he said something really interesting in that banks were actually finding it quite difficult. Incumbents were finding it a bit tough to get some of this talent in the last 6 to 9 months. So they're very much using the crypto winter as an opportunity to speed up, to get up to speed with what was happening in crypto and to skill up and to have some of this talent that they didn't have before. All of these developers and folks who are specializing in compliance who also had the crypto knowledge as well. So it was a great opportunity. And he said the next 6 to 9 months was very much a time that they wanted to bring these people on board.
So a lot of crypto originally, or like the crypto ethos, was very much anti-bank, anti-Wall Street, anti-centralization, right? So I wonder, like, how is it to go from that to banks? And will banks really want everyone there, right? Like, I think we spoke to someone who said, we don't really want them if they were like going after us before. Like,
I think there has been like a bit of smirking at the top levels of some banks at the fact that these people who have been sneering at the traditional banking sector for years and thinking they were above it all are suddenly completely on the rocks. One banking executive said to me, we're watching with interest and we will hire some of them, but we certainly won't be paying the premium of the month that we would have had to in years gone by. And I think the culture of crypto and the culture of Wall Street banking are very different. So obviously conventional banking is like much more tightly regulated. Compliance is a much more important area than it has been traditionally for crypto firms. So banks
risk management as well.
Yeah, risk management, and banks will be expecting people joining from crypto firms to show that they understand how to perform in a tough regulatory environment.
But of course, a lot of these roles, there's a bit of a revolving door within these different sectors. A lot of folks who have gone into banking right now or had come from crypto, perhaps were in banking before that, would have been at startups before even that. They're obviously highly talented people with lots of skill sets, being in both incumbents and then also fast-growing startups. So I think for a lot of banks, they're also the sort of skill set they're bringing and the fact that they are very much fast learners and can adapt very quickly is also an attractive process, even if they don't have all the skill sets to begin with.
So you also spoke to fintech firms, right, that were hiring. I think you had another story earlier this year about Revolut. For sort of US listeners, it's available in the US, but it's more popular in the UK. It's sort of a payments company. It was a payments company originally, right? It became famous because it'll let you pay in different currencies in different countries. And they have a big crypto business and they're hiring still, right?
Absolutely. And we reported on how they had won their UK registration for their crypto asset business, which was a massive win for them. And in terms of expanding in the UK, it's a huge thing. Earlier in the summer, they told us that they were increasing their crypto headcount by 20% globally. And that was mostly in the UK, US, and across Europe. They opened a crypto hub in Cyprus. So you can just see by that characterization that there's huge growth in terms of their crypto business there. But with other fintechs as well, even if they weren't focusing on crypto, they kind of need that sort of talented pool that we're talking about, because we're talking about developers, we're talking about people, as we said, who have experience in regulation or in fraud. So there is hot talent out there. So some of the other fintech companies that we spoke to was Plaid, Stacks, also Starling Bank, Block, and they all said that this is hot talent and they encourage people with crypto experience to apply.
After the break, we'll hear more from Aisha and Will on why ex-crypto workers are moving from DeFi to TradFi. So what's the reverse angle here? Like, what could happen to crypto if banks all of a sudden start becoming super attractive, or actually the only place for now where you can work at if you're very good, and they'll be able to pay you more because crypto potentially has less money now? Do you think there'll be a potential drain of talent there? Or like, will we see when Bitcoin, if it goes back up, then they'll be rehired? Like, is it an endless back and forth?
I think crypto firms will be very much hoping that they're down but not out. No one knows what's going to happen to Bitcoin next. You know, it could go to zero, it could surge. These companies could all be back on their feet, and no doubt they'll be hoping that will be the case, and that this is not the end of the industry. When we spoke to Coinbase, they were still very much looking to the future. They said they're continuing to hire for mission critical roles. And when we looked at their website, they're still hiring for about 60 positions. When we last looked in recent weeks, that's very, very much less, obviously, than the over 1,000 that got laid off. They're still ticking along. When we spoke to them, they said, "We remain focused on our mission of promoting economic freedom around the world." So
that's inspiring, right?
It's
like,
moving.
Yeah. I don't know what's the bank slogan equivalent of that. I don't know if they have it. Like,
I don't know. Yeah.
So it's a different inspirational thing if you're trying to find something that moves you to a job. But yeah, you mentioned Coinbase. You know, many of these companies have been in crypto Coinbase was like one of the companies that was there from the start. So they are kind of used to this, like having to contract and expand. So it's not really new to them. So they probably already have a playbook of how to like rehire, what to rehire in. They probably, I would imagine many of them might know where they cut first. Is it maybe like customer service, like areas that, you know, are easier to like scale up and down, whereas perhaps you always need a head of security, like because you'll always have those assets to manage.
And the roles that Coinbase are trying to fill are very functional, very sort of sensible, grown up kind of roles, like business operations and strategy, human resources, recruiting, legal and compliance.
Of course, they're like now a listed company, right, compared to the previous. So.
Yeah, and these are companies, you know, not Coinbase, but the companies and professionals that are very clever, very skilled, have like often lived on the seat of their pants, flying by the seat of their pants a bit, I think. And they'll you know, they're survivors. They know how to adapt. They'll be hoping and planning on a return, I'm sure.
Absolutely. They seem very bullish, and that's it. They believe in crypto. They believe, that's why they're there. And they've seen these cycles before. So for a lot of them who have remained, feel like, well, we've been through this already. So why would we leave now?
Yeah. And, you know, it's not just, I mean, we're obviously in a crypto winter, but it's definitely not easy times for tech in general, and perhaps finance, and perhaps in this case, the country at large. So I wonder, like, you know, we're talking about crypto, but maybe like they will recover faster than a tech firm. Like, you know, you cover like buy now, pay later a lot. So, you know, there's firms there whose valuations have been slashed. So in a sense, I wonder, like, do you see them perhaps rehiring more? Do you see like tech firms, like what might
That's
happen?
Such a good question. We just saw Klarna reports that Klarna last week were looking into more cuts, especially if companies dealing with high interest rates who are lending. We'll have to keep an eye out on that. I think different firms and different sections of fintech will fare better or worse in what we're going into right now, especially if you're a wealth management app. Maybe you'll do better, right? It's really hard to tell. But again, a lot of these fintechs, they survived a pandemic. Before that, they got through Brexit. They've been in quite a volatile situation for a while, and they've been challenging the incumbents for all these years. So I think a lot of them will feel rather bullish, and they're like, okay, this is a challenge we can take on.
Or they'll tell us that they're feeling rather bullish.
They'll tell us.
Yeah.
Absolutely. But the state we're in, I just don't know.
Yeah. And we're in a very difficult global economic environment at the moment. And so workers inherently might well feel at this time they'd rather be at a well-established firm that they know isn't going to go bust. They'd rather be at a Wall Street bank or a hedge fund, for example, and that it's better to be away from the inherent risk that surrounds like crypto companies. But if and when the economy gets back on its feet, that whole calculation may shift. people may feel ready to get stuck back into like riskier roles where they can, make even more money, where the options in a crypto company become worth more money if they're being paid in those. Like things could shift quite quickly.
And you mentioned token payments. In some cases, like the tokens are part of the compensation. So in a market that's crashing, like you really have to believe in the company and what the value of that company is, and perhaps that its token will go up as part of your compensation.
Aisha spoke to a guy who had left Coinbase recently. He was on a great package. He was on about $175,000 plus a generous stock option package. And he said one of the issues was that colleagues where their pay had been converted into crypto started panicking. And that was a catalyst for them getting out and jumping ship. But yeah, if crypto looked like a safe bet again, suddenly these jobs could look really, really appealing.
Yeah, and I've seen a lot of people on Twitter, for example, sharing Bitcoin versus the pound, this is the sort of territory that we're in at the moment. And yeah, it might sound flippant, but I guess these are calculations that people will be making.
Yeah, I don't know what's scarier, being paid in the Bitcoin or being paid in sterling at the moment.
True. Okay, let's go back and start crying all in a corner here in London. All right. Thank you so much for joining us.
Thank you very much.
That was a lot of fun.
Yeah, I thought so too. Yeah.
You can find more of Will and Aisha's reporting on the Bloomberg terminal, on Bloomberg.com, and on Twitter at Aisha Gani, at AISHAGANI, and at William Shaw 546. That's at WILLIAMSHAW 546. I'm Ana Herrera, Bloomberg Senior Crypto Editor.
On the next episode of Bloomberg Crypto, if you're an avid follower of whatever the US is up to as it relates to crypto regulation, then you might know it's time to get updates from the White House and other federal agencies on exactly how and what's next should be coming down the pipeline as it relates to crypto regulation. For everyone else, don't worry. This episode will give you the latest. This is Bloomberg Crypto, a daily podcast from Bloomberg and iHeartRadio. For more shows from iHeartRadio, visit the iHeartRadio app, Apple Podcasts, or wherever you get your podcasts. Send us your comments, questions, or suggestions for the show to crypto@bloomberg.net, or find us on Twitter, we're @crypto. The supervising producer of Bloomberg Crypto is Vicky Vergolina. Our senior producer is Janet Babin. Our producer is Mohammed Farouk. Associate producer is Moses Andam. Desta Wonderad is our engineer. Original music by Leo Sidran. I'm Stacey Marie Ishmael. We'll be back tomorrow.